Today we're going to talk about locking interest rates. When can you lock your interest rate? When should you lock your interest rate? And if your rate is locked, rates fall, what can you do? Is there such thing as a float down? This is Dawn Connors at Mortgage One. In this video, we're going to leave out new construction. So if you are buying or having a home built, rules apply differently on new construction homes, on locking interest rates. I'll do a different video about that. In this video, we're assuming that you're buying an already existing home and you go and you get pre-approved. So at the time of pre-approval, when you get pre-approved, the interest rate that's used to qualify you is a floating interest rate. That means that that rate is not locked. That is a floating rate, which means that rates can fluctuate indefinitely with the market as you look for a house. It may take you a couple weeks to find a house, a couple weeks. Even if you already have a house picked out during your pre-approval stage, generally that rate is not locked until you're through inspection and you're within 30 days of closing. Why 30 days of closing? The interest rate is the best rate, or the typical rate is at a 30-day lock. It includes any fees for locking, and it's already included in your closing costs. You can also lock for, say, 15 days or 45 days, and the fees are a little bit less on a 15-day lock and a little bit more on a 45-day lock. Even if you get a loan estimate from your lender during pre-approval or an itemization of cost, that interest rate is not locked. It's not locked because you don't have a contract. Once you have a contract to purchase, then you can look to lock your rate. You either want to wait for your home inspection to be completed. I suggest you do that, because what happens is, if that house falls through due to inspection, then you're back on the market looking with a locked rate, and it's extremely stressful, and then you have to face what's called worst case pricing, and so rates may get better. And so there's just some complications there. So the best thing to do is to get your home under contract and to go through your inspection and then look to lock your rate. Typically, you should lock always, or 80% of the time, when you're within 30 days of closing. So my recommendation 80% of the time is to lock my clients if they have a contract and they're within 30 days of closing. Why is that? Because market fluctuations are real, and sometimes they fluctuate a little bit and sometimes a lot. Interest rates typically come down slow and go up fast, and you have a small window of period of time, say 2 to 4 weeks, until you have to get to closing. And if you're floating that rate and market rates go up, you're stuck with that higher rate and you have to close on that contract. Versus on a refinance, you have more time to wait. So in the future, you can look to float the rate and just see what happens with the market, because you don't have any stress of a contract. So generally, now, if interest rates go down, can you buy down your rate? Generally, they have to go down by a 1/4 percentage point or more, and you can recapture, you can float down your rate, generally picking up about half of the benefit. So if rates fall a 1/4 percentage point, you'll come down an 1/8. If they fall a half, you'd come down a 1/4. If your lender does not have a float down policy, you do, and you have enough time to switch lenders, you do have the ability to change that you do have the ability to change lenders, as long as you have enough time to get to closing. And there's no fee that you need to pay that lender for locking that interest rate. If you didn't pay any fees, then you're free to go to a new lender. You don't have to stop, ask them if you owe them any money because you locked your interest rate. That is definitely a no. So there you have it. If you can get to closing on time, you can switch lenders. You can also look to buy down your interest rate. Always ask your lender if they have a buy down policy and what that looks like before you decide to go with that lender. That's a good idea. And then my recommendation is, if you have a contract, you're through inspection, you're within 30 days of closing, lock your interest rate. If it's greater than 30 days, then maybe you wait till you're inside of that 30-day marker so that you get the better interest rate or the lower fees. That's up to you and your lender to discuss. The best thing to do is to discuss these things with your lender at time of pre-approval, so that you have a good understanding, and so that lender's not just locking your rate without asking you, or having you participate, especially if you want to participate and you're really curious about it. This is Dawn Connors at Mortgage One, providing you fantastic mortgage solutions and keeping you in the know.